Welcome back to another Explainer, everyone. Today, we're diving into something absolutely wild. We're looking at Meta's 2026 financial roadmap, and we are literally just following the money. You know, when a tech giant of this size places its chips on the table, you get a remarkably clear window into what they think the future holds. Our goal today? Stick to the raw numbers, act as financial detectives, and translate this massive corporate data dump into a clear roadmap of the AI era. Let's get right into it. Okay, so let's hit the sticker shock right out of the gate. Meta expects its total expenses for the full year of 2026 to hit somewhere between $162 billion and $169 billion. Yeah, billion with a B. Just pause and let the sheer scale of that sink in for a second. We're talking about money going out the door in a single fiscal year that actually eclipses the entire economic output of quite a few countries. It's staggering. When a number is that massive, you've got to ask, where exactly is all that cash going? To figure out how a company can even manage to spend that much in 12 months, we need to break it down into its core drivers.
Which brings us to driver one, building the hardware. Because hey, if you want to understand the future of the internet, you absolutely have to look at the physical foundation it's sitting on.
Look at how Meta is actually managing this massive physical scale-up. They're using what's called a capacity bridge. Basically, they are rapidly bringing power online by renting from third-party cloud providers while they're furiously building their own massive data centers in the background. And as those new in-house arrays finally come online, well, higher depreciation and infrastructure operating expenses immediately kick in. You know, you have to power, cool, and maintain all that new gear. And here's the kicker. This physical infrastructure ramp-up, it is not just a side project or a minor line item. The financial data explicitly confirms it is the majority driver of the overall expense increase for 2026. Think about it. The servers, the massive cooling systems, the literal concrete and steel for the data centers, and all that rented cloud space, this is the primary engine behind the entire spending surge. It takes a monumental amount of physical stuff to run the digital world they're trying to build.
All right, moving right along to driver two, hiring elite brains. Because, let's be real, all that hardware is basically just a collection of expensive space heaters without brilliant minds to actually program it. Employee compensation is actually the second largest contributor to this expense growth. And they aren't just putting out regular help-wanted signs here. A massive chunk of this cash is targeting elite technical talent in priority areas. The main focus? Artificial intelligence. Specifically, the data calls out a division named the Meta Superintelligence Labs, or MSL. I mean, just the name Superintelligence Labs gives you a sense of the sheer ambition, right? MSL is this priority technical division aimed at driving advanced AI research and development. To secure the absolute top-tier talent capable of building superintelligence, you have to offer wildly competitive compensation, and that is pushing their corporate expense sheet through the roof.
This perfectly explains the timeline and why 2026 specifically is such a crazy expensive year. It's basically a fundamental accounting lag effect. Think about it like this. Step 1, you aggressively hire all this elite technical staff for priority areas like MSL throughout 2025. Now, if you hire a top-tier engineer in, say, October of 2025, you're only paying a couple of months of their salary that year. But step 2 is where the bill really comes due. 2026 is the year Meta has to absorb the full 12-month impact of all those salaries, bonuses, and benefits for the giant wave of talent they scooped up the year prior.
That brings us to the segment shift, apps versus reality labs. We've got a really fascinating, kind of counterintuitive twist here regarding where this money is actually going.
See, a lot of people naturally assume that Reality Labs, the division doing all the metaverse and VR stuff, is the big money pit right now. But the data shows something completely different. It's actually the family of apps that's driving the new expense growth. Meanwhile, operating losses for Reality Labs are projected to stay pretty stable, just hovering right around their 2025 levels. So this huge spending surge, all that AI infrastructure, the superintelligence labs talent, it's fundamentally being driven by the side of the business that houses the apps billions of us are already tapping on every single day.
Okay, let's look at the ultimate bottom line. You'd logically think that projecting up to $169 billion in expenses would absolutely wreck a company's profitability, right? Well, let's check the math.
Here is arguably the most mind-blowing takeaway from this entire roadmap. Despite this massive step up in physical infrastructure, and despite eating the full-year costs of a colossal talent hiring spree, Meta actually expects its 2026 operating income to climb above its 2025 levels. Wait, let me just repeat that because it's crucial. They're planning to spend significantly more, but they project they will ultimately make more in operating income.
The business engine behind that family of apps is expected to generate enough cash to not just cover the superintelligence labs and the new data centers, but to completely outpace the previous year's performance.
So it really leaves us with this final provocative thought as we wrap up today's explainer. We've seen the roadmap. The literal concrete is being poured, and the absolute best minds in the world are being gathered and paid top dollar. If a company can expect to actually generate higher operating income while pouring up to $169 billion into these foundations, what kind of world-shifting technology is being built behind closed doors right now? Seriously, when the Meta superintelligence labs are fully staffed and those huge data centers are humming at full power, what is that superintelligence going to look like when it finally comes online? Think about that for a bit. Thanks so much for joining me to look at the numbers today. Keep asking questions, keep digging, and I'll catch you on the next explainer.